Hello and welcome to Finextra. I'm Emily Horler and I'm here with Jim Warburton of EPAM. And we're talking about the significance of Brexit on the financial services industry. Thank you for joining me.
Thank you.
What will the impact be on the existing legislation programme that the banks are already working on? And how should the UK avoid regulatory vacuums?
I think in the main, the regulatory programmes will carry on as they are. I think there are a few good reasons for that. The first is that the UK will want to gain as much equivalence on the regulatory rules to the EU rules as possible to allow us access to the market if we aren't passported in. So we will want to get equivalence to the EU rules. And obviously these are the regulations, a lot of them are very good for consumer protection and they're desirable regulations to have anyway. So I think in the main the regulatory programmes will continue as is. As far as a regulatory vacuum is concerned, it's a very important question because obviously a lot of the regulation that's come out of the EU has originated from the EU but wasn't as a result of EU mandates. The G20, for example, has driven a lot of the regulation and it's gone to the EU to ensure that EU countries comply with that. Now Britain, even when it comes out of the EU, will be a member of the G20, so we will want to still comply with those regulations. And therefore there might be times when we have to introduce saving legislation, UK domestic legislation, which is effectively similar to the EU regulation to ensure that we still meet our commitments to bodies like the G20.
Is there an opportunity for the UK to leverage its strong reputation as a regulated environment?
The UK regulated environment arguably is really the gold standard of the regulators within Europe. And also the UK regulators have been quite proactive and collaborative in trying to not only regulate but foster growth within the businesses that they regulate. An example of that would be the FCA, where with Project Innovate they've provided regulatory sandboxes and assisted innovation. So I think the UK regulators have already slightly started to almost compete with the other regulators, and I think I would see that as that direction of travel continuing and maybe accelerating.
So if passporting goes, which financial institutions will be the most affected?
I think it's going to be very different depending on the size and nature of your business. If you take at one extreme, if you take a relatively small business that has a largely domestic business model, if they lose passporting, that may not impact their business much at all, and so therefore it just is business as usual, carry on, and that's not so much of a problem. If you go right to the other end of the spectrum, go to a very large global bank or global financial institution, to obtain access to the EU market, clearly if passporting is gone, they'll need to have a subsidiary or branch in the EU, and they probably already have one. So while you don't want to underestimate the effort that would be involved in a lift and shift of moving some operations and functions out to those branches, they would already have an infrastructure in place for the larger scale ones. So then the question lies in the middle. If you're very large, you probably have a branch. If you're very small, it might not impact your business very much. There is a potential for a squeezed middle where loss of passporting could have a substantial impact on the business of that financial institution, and they don't yet have the infrastructure in place or a branch or a subsidiary in the EU and might have to have considerable investment to set one up, and that could create challenges for them.
Jim, thank you very much.
Thank you very much.
And thank you for watching.